In Chapter 9, we did accounting for purchases and cash payments. In Chapter 10, we're going to do accounting for sales and cash receipts. In Lesson 10.1, we're going to do accounting for sales on account. Explain the relationship between the accounts receivable ledger and its controlling account, and record sales on account using a sales journal. Subsidiary ledgers and controlling accounts. The amount a business receives from the sale of an item of merchandise is called the selling price. The amount a business adds to the cost of merchandise to establish the selling price is called markup. An accounts receivable ledger is a subsidiary ledger containing all accounts for charge customers. You'll see that all of the customers that you offer credit to are in the accounts receivable ledger, and the controlling account for that is accounts receivable. Accounts receivable increases with a debit and decreases with a credit. The subsidiary ledger form has the customer name, customer number, date, item, post-reference column, debit credit, and debit balance. You'll notice that the accounts receivable account has some of the same column headings. The only difference is accounts receivable in the balance column has a debit and a credit. A tax on a sale of merchandise or services is called a sales tax. A sales journal is a special journal used to record only sales of merchandise on account. Sales journal has the date, the account that's debited, sale number, post reference, accounts receivable debit, sales credit, and sales tax payable credit. This shows a sales invoice for 3 Green Products to Wells Apartments. And you'll notice the date. There's a sales invoice number, which is 498, the date, customer ID, and the terms, 2, 10, and 30, which means you get a 2% discount if you pay within 10 days. Otherwise, you need to pay it within 30 days. You'll notice that there's a subtotal, sales tax, and then the total. When you are selling to the final consumer, there has to be sales tax. Sale on account. November 4th, sold merchandise on account to Wells Apartments, $454.50, plus sales tax, $27.27. Total, $481.77. Sales invoice number 498. Accounts receivable increases, sales increases, and sales tax payable increases. November 4th, Wells Apartments is our customer. The sale invoice number is 498, and since these are all sales on account on the sales journal, you don't have to put an S in front of it. The accounts receivable debit is $481.77. Sales credit $454.50. Sales tax payable credit $27.27. So you add the sales credit, sales tax payable credit to get what goes in the accounts receivable debit, which is the total. How are selling price and markup related? Markup is the amount added to the cost of merchandise to set the selling price. What is the relationship between the accounts receivable ledger and its controlling account? The total of the accounts in the accounts receivable subsidiary ledger equals the balance in the controlling account, accounts receivable. What column on a general ledger form is not on an accounts receivable ledger form? Credit balance. What is the title of the general ledger account used to summarize the total amount due from all charged customers? Accounts receivable. How are sales tax rates usually stated? As a percent of sales. Why is sales tax collected considered a liability? The amount of sales tax collected is a business liability until paid to the government.